There's quite a week, right about a couple of things, wrong about a couple of things. Next, remember every trade is just another trade. Do not spend a lot of time beating yourself up when it doesn't work out, or you won't have longevity in this industry. Okay, you really have to learn that losses are part of the business and no one's perfect. I know top guns that, miss gold and I miss things all the time. I'm wrong at times. I admit when I'm wrong. And more importantly, I get out of the way when I'm wrong. So I want to just review this week and prep you for next week, the week ahead. And let's start off here with the euro. So Sunday night came in with a buy, showed this trend line that it was struggling against, and we finally broke through it. And what's interesting about this line, and it still amazes me, even after all these years, how you could just draw a line and see the market react to it. And look, twice it did. So this was a breakout test, a trend break, and then it came back to where the trend line was and turned good. And you can't say anything negative. You can't be short euro. So I think that the big bull market is underway. Let's use a telescope. What a great week. We nailed the 102 level when we were, not quite there. I said between 102 and 101, and we got down to 101.76. So here we are. I think that the next level is going to be up here around this 107 level. That's going to be pretty critical, and there's just an arithmetic uh, count on it from 102 to 105. It gives you 107, 108. I have this horizontal line here, so it must have been significant. But you also have some moving averages on the weekly. This is weekly up here around 107.20. So bought the euro twice. Just to review on the trade war deal. On the first day that they announced tariffs and the dollar came in sharply lower, the trade selection was to buy cable because it had only retraced 61.8 compared to euro that took out 78.6 uh, and compared regrettably to the spike that we have in Aussie. That's a bottom and we should hold 63. I thought I'd have a chance to buy a 50% pullback, and that didn't happen. Aussie, this is a significant bottom in Aussie, significant top in Canada. The worm has turned in the dollar. Just looking at the dollar here, I think that we're going to go to 104.50 is the next target level. That's down around here. There's a lot of support here as well at 105.5. So between 5.5 and 4.5 is probably the next place the dollar tries to make a stand. But you just take if we get a 104.5 breakdown here on the daily 200 day from 110, that's 5.5. That takes you under par. So, and that's where I'm looking for is under par. Sometime I don't know this summer. We'll see how long. It may happen fast. I mean, things are happening faster. The yen, I got taken out on a news event when I tried to sell resistance, and now it's pulling back. This may have been it. So, there's also the possibility that we get some type of ABC here, where we've had this initial A, and then we have this, and then we get one more rally. Otherwise, you guys know I've been talking 120 is viable in the end. This was a big breakdown that we had, and I see nothing but lower. This looks pretty ugly to me, So next important level is this black line, is this 140 level. So you take if we get down here to 140, and the high was 62. That's over 20 handles. There's your 120. Okay. That's good. I would expect if the correlation works, that's going to be sharply lower interest rates, unless this is just um, safe haven buying that the end turns into. Anyway, forget about you know what it means. Trade price. Price is ugly. Don't be long U.S. dollar yen. Um, there was a rally this week, and um, it zigged when I zagged. So again, you can't be right on everything. Um, this was a big trade, and I hope some of you guys took it. It was the gold silver ratio trade. So there's a weekly. We're getting an outside week down. But I was talking about it at 92 on the daily. We had a real nice clean three drive. Look at this. 1, 2, 3. This was the day I talked about it. I think we're headed a lot lower. Of course, there'll be, recoveries along the way, but I think we'll challenge these lows sometime by the summer. So you'll only get 70 pieces of silver for 1 ounce of gold instead of 92. And people who are not in the US that trade CFDs, you can also trade this. So looks like a nice short. Um, Gold's down 11. We did not make a new high. We just barely missed a new high here. And yeah, it's kind of an ugly day. Maybe we're going to 3,000, but we could pull back further. I underestimated silver. Okay. And I was wrong. Okay. So silver went much further. I missed it. I wasn't short. So I caught a short trade, but I didn't get caught the wrong way. I still, even though I believe silver is going to outperform gold, um, you know, we still could be, this still could be a failing rally. This is about 78.6. I thought we'd fail around 32.80. And that's, we exceeded it, but that's where we're trading now. So we'll see. I have no trade. I also recommended booking some of the miners taking profits on GDX on, at least half. You've had over a 30% run from it testing a weekly breakout. We're almost at new highs. Be careful here. Looks like it can make a new high, but it also could be vulnerable to a quick, sharp sell-off. The move in gold has been a squeeze. Bob talked about lease rates going up, etc. There's been a ton of gold moved to the COMEX warehouses. So when you have a short squeeze, it's very dramatic on the upside, but when the squeeze is over, there's a big vacuum underneath the market. So that's why I'm advising people and why I chose the gold silver ratio instead of making a directional bet, making a relational bet that silver would outperform. And it could have happened the other way. Silver could be going down and gold could be going down faster. And you'll probably see days like that as the gold silver ratio makes silver the preferred long to buy on breaks, and gold, when you're bearish in metals, the preferred short to sell on strength. Let's move to the big story. And the big story was yesterday in the S&Ps. So to me, it's a breakout. And I said, get out over 6,100. And this is why. Okay. So to me, this looks like a breakout in the S&Ps. This is a 200 handle range from, call it, 6120, 5920. So if the breakout is here at 6106, that's going to measure 6330. If we start closing back under this breakout, maybe I just got shaken out. We're not making new highs. in the RSI, we are diverging. We made new high. We did not make new highs. We made new highs, but we also diverged on the daily, right? We're also diverging and have been for quite some time on the weekly. So this looks like the melt-up wave that everyone's talking about. You could pick your number. A lot of people talking 64. The Super Bulls are, in the 7,000 handle range. Um, I don't know if we could have that much in it, but 64, 63, 6,400 looks viable. So I covered all my bearish put positions yesterday, and I'm just going to see if we get to those targets, and then look at things like, will this provide a nice selling opportunity for me and Apple, maybe around the 250 level, if this was a five wave. Otherwise, we're going to new highs. Maybe that's what's going to happen. It did confirm here up here. But I'll be looking at the low 250s on that. I've seen counts now that NVIDIA could trade 160, that this was a four, and we have another high, maybe 165 or so. So we're in the blow off phase. You could ride the blow off. You're riding the blow off if you're long metals. You're riding the blow off if you're short the dollar. So there are different ways besides selecting individual stocks to take advantage of this. Real right on the dollar. And, I just want to remind people, because they forget, is that we were looking for 109 for a long time, okay, from par last October. And then that was going to be the high. So here was the 109 high. We got short, okay. It was a nice ride. Then we had the tariff announcements, and you had that huge gap opening. I bought cable on this day. Still stayed long. The euro, it did not make a new low. And then on the gap lower opening this week, I bought euro. So we kept you out of being short the dollar, in fact, long the dollar for a lot of this, and then had projected the 109 high, got above it, but projected it way down here. So now here we are, topped out dollar, heading to 104 and a half. So maybe I should just trade currencies. This was very tricky to me this week, TLT. When the first CPI number came out, it looked like it was negating the head and shoulders bottom formation. And we had this day, and very unusually got it all back the next day. I don't know if it was a comment. Well, and it got it all back on a hot PPI number. So that's another reason I got out of the way. Maybe bonds are going to do something like this. Maybe this is A, B, C. Anyway, I don't know how to trade them, so I'm out. Crude, I'm still bearish. I think we'll head down and take out these lows, and then I'm going to be prepared to buy um, energy calls, energy stocks, but that'll be under 66. So we'll see. You would think that lower crude also fits into lower yields, lower dollar, less inflationary pressure, and part of the blow off in the S&Ps. So you have to stay with these trends and just trade reactions. I've been saying for well over 6 weeks, sell dollar strength, sell dollar strength. So you have to continue to do that, and book some of your mining position. And let's just take a look at, Bitcoin's really been lagging compared to all the other risk models. Um, I don't know how to interpret it sideways. It could come out of here either way. It could break down under 92, which I don't expect because of the easing of financial conditions, and it could blow off to a new high. We've only had two drives. And let's do a quick check on the grains. If you don't have any grain exposure, talking about this for a while. Don't chase, but wait for pullbacks. Wheat looking pretty good coming out of here, almost like a important breakout above all the moving averages. And soybeans, getting very little pullback. It's working off its overbought condition. You have an 80 reading here, and now it's down to, 50 without giving up anything, just moving sideways, which points towards the internal strength of a market when it can't even correct 38%. So that's a wrap. Long the world, as long as the dollar is headed south, you can buy almost everything except crude, I believe, at this stage. So happy Valentine's Day to everybody. Uh, we love you. That you're courageous people to want to be traders. I'm telling you, I have a great interview with Peter Grandich lined up in early March, and a very famous trader. He wrote a book about being a Wall Street whiz kid and his life's journey. And some of us pay a price. We all pay a price to do this. So we could always talk about directional moves in the markets. How about getting the life story of someone who's lived it, who's still standing, and God bless the broken road that got him to where he is now? So mark that on your calendar. It's going to be March 6th or 7th, Peter Grandich. And that's going to be a wrap, everyone. You have a great weekend. Remember, don't just count your pips, count your blessings. And remember, the most important word for a trader is next. So I'll see you next week, and I'll see you in the room.